Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. Midnight came and went. The government is shut down. Punchbowl's Jake Sherman.
I just don't see any situation in which Republicans are going to negotiate right now.
On what's next for members of the U.S. Senate who may just keep voting on the same thing over and over.
And the tipping point is exhaustion.
And the high drama on Capitol Hill.
There's concern from Democrats and glee from Republicans. It's so crazy.
Then, with no government data, the last jobs report that may matter for a while. Payroll company ADP's chief economist Nela Richardson joins us with her number.
There has been a slowdown in the hiring momentum from the beginning of the year to where we are now.
Plus, antitrust allegations against the biggest names in real estate scrolling.
What's Warren Buffett's great line? Never ask your barber if you need a haircut.
Right.
And Walmart says, keep your red dye number whatever to yourself.
I don't think it would taste as good.
You're going to be forever tainted, but this is about saving the new generations.
I know.
You're a lost cause.
I know.
It's Wednesday, October 1st, 2025. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. And here we are. Today is the first day of the rest of your lives. The major averages, though, for the third quarter, that was a sight to see. The Dow was up by 5.2%, the S&P was up by 7.8%, and the NASDAQ was up by more than 11%. Then you had the Russell 2000, that's the small cap index. It was up by 12%, and it saw its best quarter in a little under 2 years. Treasury yields this morning are, the 10-year is actually a little higher. It's at 4.15, the 2-year at 3.6%. We do have a lot of questions about what comes next, and that's where you could be into some issues. We're going to try and look through some of these data points today.
On this vote, the ayes are 47, the nays are 53. The 60-vote threshold having not been achieved, the bill upon reconsideration is not passed.
Democrats may have chosen to shut down the government tonight, but we can reopen it tomorrow. All it takes is a handful of Democrats to join Republicans to pass the clean, nonpartisan funding bill that's in front of us.
Meantime, the U.S. government now officially shut down. This after federal funding lapsed at midnight, 12:01. Joining us now with the latest, trying to understand what happens next. Jake Sherman is Punchbowl News' co-founder. He's the NBC News and MSNBC political contributor. Good morning to you. So the question is, what does come next? What does come next, Jake, at this point?
It's a good question. I mean, Republicans are pretty insistent that they're not going to cave, and they feel like they have the upper hand. They have passed a clean funding bill to extend funding until November 21st. Democrats effectively want the extension of these COVID-enhanced premium subsidies for Obamacare. They're not going to get that. Republicans are not going to cave. And we saw last night, Andrew, that two more Democrats voted for the clean CR when Republicans put it up. So John Thune is going to go to the floor today and over the weekend, Friday, Saturday, and he's going to keep putting up this bill and hope that more Democrats fold. So I think that's what's going to happen. There's not going to be a deal. I mean, the deal that's going to take hold is the deal that's already on the table, which is extend government funding for 7 weeks. And have this fight again in 7 weeks, or have some sort of fight over the next 7 weeks. And I'll just add this, what Democrats are demanding here, the extension of these enhanced tax credits for Obamacare. Republicans are not for that. This is not like an appetizing. Usually you shut down the government because there's something that you think the other party will be interested in. Here, Republicans just plainly aren't interested in that. So I think this fight is gonna end in the next week or 10 days, and then it's going to be rejoined again over the next 7 weeks.
But what is going to be the tipping point? What is the pressure point, and what do the Republicans have to offer anything? Can the Democrats
they don't.
somehow walk back from this and just say, oh, well,
would they
mistake,
do this?
We're not doing this?
Would they do this if Schumer didn't acquiesce, Jake? Would they? Are there guys that would split? I mean, I guess a couple already did, but would they split off from the minority leader? And what would that do to Schumer? That's even worse in terms of primary challenges if he can't control his fellow Democrats. Could that happen where you get to 60 and he still says don't do it?
Well, you bring up good questions, Joe, and I'll say a few things. Number one, I don't think it's guaranteed that Schumer runs again. I think he's not up until 2028. So, like, a primary challenge, I think, is obviously what people are talking about. I don't think that really matters. Now, listen, it does for leader. It does impact his standing in the Capitol vis-a-vis what kind of power he has, what kind of power to control his members that he has. I think that's important to think about. Now, you are seeing fraying around the edges. Senators are generally more free agents than members of the House. Just generally speaking, they have more power. They have more sway over the process. I don't think Republicans have to offer much. And the president and J.D. Vance and Mike Johnson and John Thune have basically said we're not going to offer anything. And this is the deal that's on the table. We're happy to have the conversation about these subsidies, about these tax credits, but not in the context of government funding. Now, I don't want to, we can't let Republicans get on their high horse here. They have forced conversations similar to this during shutdowns. They have tried to hold the government hostage on many occasions and successfully did twice. So they're not better than this, but I just don't see any situation in which Republicans are going to negotiate right now. I mean, Thune has momentum. Catherine Cortez Masto of Nevada, Angus King of Maine, and John Fetterman of Pennsylvania all have voted now for a clean CR. So we'll see if that number grows the next time. And the tipping point, Andrew, is exhaustion. I mean, you could argue back and forth the economic impact of a shutdown. I think it's over a week, it's relatively minimal, but as time goes on, it grows and grows. But people get exhausted of not having the government open, of services not being available, et cetera, et cetera. And I think that pushes people to reopen the government.
Hey, Jake, yesterday we had Mike Johnson on, the House Majority Leader. Speaker Johnson. And then we had on Hakeem Jeffries, the Minority Leader. And it was kind of crazy to watch what the two were saying. Johnson laid it out. He said, this is a clean CR. They want to give health care to illegal immigrants. Hakeem Jeffries came on and said, those are lies on both counts. You just called this a clean CR. Where do you come down on the rest of these issues and the rest of how this kind of shakes out?
They don't want to give health care. It is a clean CR. Like, I would be happy to whack Johnson if there was something to whack him over here. This is a clean CR. They are not playing games for the first time. Republicans are not. This is a relatively clean CR. It doesn't include the priorities that Democrats want, but that does not mean it's not clean. That's number one. Number two, Democrats really don't want to give health care to illegal immigrants as part of this process. It's illegal for immigrants to get these health care benefits. You could argue that there's fraud and they do get these health care benefits. That's not what Democrats are trying to do. What Democrats are trying to do is they're trying to roll back some of the cuts and some of the provisions from that one big beautiful bill.
It's not fraud. It's not fraud. They do it under the light of day in California. 1.6 million under the light of day. It just happens to be state funds that are it's fungible. They are federal dollars.
But Joe, fine. Let's accept that argument for argument's sake.
It's just not fraud. It's done under the light of day through loopholes, which were closed.
Let's accept that argument.
Okay.
Democrats in this process are not trying to give health care to illegal immigrants.
They're not trying to make it legal to give federal dollars. That's true, but they are. But federal funds are ending up covering illegals' health care. That's millions of them.
Fine. If you want, we could. That's not what Democrats are trying to do in this process, is my only point. Whether they do in California or not, I am an expert on many things.
Many other states.
Yes, I understand. Democrats are not trying to do that in this process. Now, the main disagreement here is over these tax credits for Obamacare, which Republicans rightly argue were created during COVID. I will add this. There are a number of Republicans, not a lot, a number of Republicans who will want to extend those tax credits. And it's going to be a problem for Republicans if you see healthcare premiums jump 75%. I understand Democrats put these in place, but Republicans are now in charge, and there's going to be a big effort to try, if the government reopens, when the government reopens, there's going to be an effort to try to reinstate or tweak some of these subsidies to put them back into place.
Okay. I think we're going to leave it there, Jake. There's not much There's not much to know at this point. A lot of speculation. We can speculate.
We should know the government is shut down and it will reopen at at a date we don't yet know.
Well, Jake, the next thing is if we have mass firings.
That's right.
I think the mass firings is the next piece of this.
Right?
I'll add to this very quickly that the White House has said, Trump said yesterday, he could cut benefits, he could cut programs. CBO said yesterday, 750,000 people could be furloughed. And there's concern from Democrats the administration will use this opportunity to conduct mass layoffs.
There's concern from Democrats and glee from Republicans. It's so crazy. The way, there are a lot of people that would love that. And I just wonder whether
Welcome to America, right?
Yeah.
Cheese will be next.
Okay, so we won't have a jobs report from the Bureau of Labor Statistics this week, given the government shutdown. But we do have data, the ADP Private Payrolls Report. It is not a replacement, but it does help paint a picture of our labor market.
What the Fed cares about when it comes to inflation is the extent to which the labor market can be a source of inflation.
ADP's Nela Richardson explains her numbers and our economy.
Is that consumer spending strong enough and broad-based enough to support job growth? We know it's supporting economic growth, but is it supporting labor market growth? Right now, we're not seeing it.
Squawk Pod will be right back. Welcome back to Squawk Pod from CNBC with Joe Kernan, Becky Quick, and Andrew Ross Sorkin, joined now by our economics reporter, Steve Liesman.
Stand by, Joe. His mic. Cue.
You read any of the, market analysis today, stocks down on government shutdown. I mean, it's 0.5% or something. It's not a lot, but certainly the conjecture, Steve Liesman, is that this time, usually not that much happens during a shutdown to the stock market. It kind of glides through. But if this were to influence, let's say, not just the release of jobs data, but actually make it worse, make the jobs data actually worse, it has more ramifications, I think.
It does, and we may not know about those ramifications.
We don't know about them, but if he...
Isn't that better, Joe? Just go to sleep, then nothing.
Yeah,
I don't know, it's all good.
Ignorance is bliss. But, if it added to a bad number, because some people are actually fired.
I'm actually going to talk about that, Joe. Because
we do this a lot. We do this a lot, because I know you.
You do.
And you know me?
I know you. 23 years or something like that for me anyway.
Right.
But listen, the government payroll report is vital, but over a short period of time, there are ways to figure out what's going on in the jobs market and with the economy. ADP, it's volatile month to month relative to the government payroll report, but over the course of a year, check this out, guys. It lines up really closely with the private sector portion of the Bureau of Labor Statistics data. In fact, year to date in August, it was off by just 9,000 jobs a month. But of course, it's not always that good. Like a lot of indicators, it was way off during the pandemic. And that raises the concern if jobs are at an important inflection point, alternative data could miss that change. Jobless claims will still be published, giving Wall Street a sense of firing, but we're going to miss the hiring side of that. Michael Feroli from JP Morgan told me yesterday, the basic model for forecasting jobs, you take the 3-month average of jobs, add in something from claims, and that's been pretty hard to beat. A little dirty little secret right there. Feroli adds that continuing claims, plus the Conference Board's employment data about jobs being hard to get versus easy to find, it's a good proxy for the unemployment rate. Claims, you can see the continuing claims have been elevated since May, but haven't gotten much worse, and even trended a bit, right, exactly, even trended a bit lower. Ian Shepardson from Pantheon. He says the best single indicator of payrolls 3 or 4 months ahead is the hiring intentions in the small business NFIB survey. After weakening earlier this summer, it's shown, you can see there's some signs of stability. So he's not worried that we're at this terrible inflection point because he's looking 3 or 4 months ahead. But
this is what I was waiting for.
Getting to Joe's point, he always gets to the end first, which is good. But one missing piece of data here, government jobs. The Trump administration's layoffs of federal workers were going to show up this month or next month. By the way, we're getting close to the survey week. So there's no replacement for that in the private sector data. We're going to have the ADP report at 8:15 and their chief economist, Nela Richardson. The expectation is for a gain of 45,000 in the private sector, with the forecast for the BLS, government, and the private sector at 51 on Friday. Guys, since there's no government, I have a proposal. Can we just name Nela Richardson the acting BLS commissioner? Because she's going to give us the ADP stuff, and that's what we got.
She might be good to be the permanent. Who knows?
We could do it, right? Because there's nobody to do it.
Yeah, hence the name private. It doesn't include government. You just pointed that out.
I will say this, Joe. I went down the alley, really the rabbit hole of the private sector data during the pandemic and the big data, trying to find replacements. You really can't do it. It helps. It doesn't replace it. There's things that the government should be doing in terms of incorporating private sector data. But at this point, we're not in a place right now. Everybody was really hopeful then. I would do all these regressions with this data, and it couldn't replace it.
But is there any way we have hit the trough already and jobs are reaccelerating?
One of the things I'm hearing right now, even from Fed officials, is this sense that they feel like business is getting used to dealing with the uncertainty and some of the new policies of the administration. So if you think about the reaction in the middle of uncertainty, you pull back, you wait, you don't fire because remember you spent all that time and angst trying to find these people. And then you say, okay, I'm not going to let them go, but let's wait to see what happens. And as this becomes clear, now of course you wake up one morning and there could be 100% tariff on your pharmaceutical imports, but maybe other sectors are starting to feel like, okay,
for
it's
a
cool.
week.
Yeah. There's an intraday tariff chart.
Right, but
I'm laughing. It's not that funny.
Is it possible that the Fed does not get burned, that it didn't need to cut because we're already reaccelerating up? But if inflation stays quiet, why not? Why not? I mean, if things actually, you might as well cut if you're not going to get burned by inflation. And maybe the Fed cut is already helping. I mean, it's not already helping employment, but it could in the next few months.
I'm going to give you two answers to that. The first is yes, they definitely could. There's a lot of controversy or debate on the Fed about just how weak the job market is.
Yeah.
I mean, you look at jobless
claims. Anyway, if there was no inflation.
It's not that bad there. You haven't had the firing. You've had this weird situation of stalling. Plus, you have this immigration issue that we don't probably talk a lot about, which is what's happening on the supply side of labor. Mm-hmm. And if demand is coming down, but supply also came down, then you don't have this spike in the unemployment rate. But now the geeky part of that answer is this. What the Fed cares about when it comes to inflation is the extent to which the labor market can be a source of inflation. So the extent to which the labor market is tight. Waller's main point when he stepped forward in July and said we can cut was that he saw the weakness in the job market as a sign that it would not be a source of inflationary pressure. Mm-hmm. And so therefore, the Fed could be missing an opportunity here to be cutting if indeed the labor market remains soft and it remains not an issue or benign source of inflation for.
Is it possible it could be reaccelerating but not inflationary in the labor market? I'm trying to get the best. We can get the best of both worlds.
That's not impossible. I mean, Joe, what's happening with AI?
Or AI. Yeah.
Do you have an idea?
I could ask AI.
You could ask AI. I did that, by the way, for one of my stories. But here's the thing. You have this interesting development where if this story about the grads not finding the jobs is true, you have an enormously talented, educated pool of labor that may not have something to do right away.
Yep.
And what they end up doing could be very consequential for what happens. What happens with factory workers, all that stuff is really very critical. Immigration is a critical issue.
Educated, but they might not be talented.
I forget who said it, but one of the officials I read yesterday with like 8 speeches this week, we have pressure on both sides of the mandate. We don't know what's happening because of the tariffs and the inflation and the jobs and the immigration. So I hope you're right about that, Joe, but I don't think it's time to sort of make that call.
I'd like non-inflationary growth. Plus,
non-inflationary job growth. Well, that's
how would that happen?
Because you move the goalpost to 3.
Look. Here's the thing.
And there's no inflation.
And I asked Myron about this, and as well as another Fed official. The administration says that its policies will be a source of non-inflationary growth.
Yeah.
It's not something the Fed has embraced at this point in its models, and that's a major source of conflict between the administration and the Federal Reserve right now.
Could be a pipe dream or it could be true.
It could be true. And whether or not you take a flyer on it being true is really what's a question here.
Right.
ADP private payroll data just hitting the wires, and Steve Liesman is here with those numbers. Steve.
Minus 32,000 versus an estimate of 45,000. Put an asterisk on that. We're going to explain why that's lower than expected in just a second. The goods sector down 3,000. The service sector down 28,000. The non-farm payroll estimate for Friday is 51,000. Now, this number here that you saw was a result in part of ADP incorporating those recent big revisions from the BLS in terms of their April to March 2025 numbers. So August was 54,000. That's now been revised down to minus 3,000 as part of an incorporation of a new growth rate in the job market that ADP picked up from the benchmark revision. So September minus 32 would have been plus 11 without those revisions. But this is the new reality. This is the new growth rate. Okay, now let's look back to the report here. What happened? Small business down 40, medium business down 20, but large business still hiring, according to this report, up 33,000. By sector, education, health services still really leading and showing the way, up 33,000. Natural resources and mining, 4,000. And you can see there the big decline there, leisure and hospitality down 19,000 on the month. Job stayers in terms of wages, 4.5%. Job changers, though, up just 6.6%. That's considerably down from August, which was 7.1%, led by leisure and hospitality and financial activities. We're lucky here to have the Squawk Box acting BLS commissioner, Nela Richardson.
Oh, wow.
Who we've now, at least for us, well, in the absence of a government, I believe we can do that, right? We can name anybody we want, right? And that's
it's like
now,
a recess appointment.
Exactly. Because this show is really recess, right, Joe?
Kind of.
You out there playing in the playground.
I don't think it's happening.
For this 5-minute segment, I will be only representing ADP. So.
Can I tell you, we can do a lot worse than have Nela Richardson as BLS commissioner?
I don't think she wants it.
No, I wouldn't either.
Nela, let me ask you, the revisions from the government, I'm a little surprised that played into what you all do. I thought you all kind of ran your own numbers, you looked at it your own way, but you do take government numbers into account for what you come out with?
Yeah, so it's very important to be clear on this point. What we do is what the BLS does with their survey data, which is annually we re-benchmark it to the truth. And in the United States, that truth comes from all the workers that are covered by employment insurance regulation by the states. The BLS serves as an aggregator to these employment numbers. They are basically a near census of all the workers in the United States, with one caveat. Why don't we just look at the QCEW and throw away ADP and BLS? Well, the problem with it is that it comes out with a 6-month lag. So every year, ADP re-benchmarks to this source of the truth that is complete but lagged by 6 months. And so what you're seeing from us, what you're seeing from the BLS is an estimate, an indicator of what this benchmark will look like in 6 months. And so this is a statistical process. It's really important. But what I want the viewers to understand is that the narrative remains the same. There has been a slowdown in the hiring momentum from the beginning of the year to where we are now. And that is consistent whether you look at the re-benchmark numbers, which Steve just shared today, or without the benchmark, whether you look at ADP or what you'll see in the BLS is a slowing of hiring momentum
Nela,
based on where we are in the economy.
Nela, I get that, and I hope viewers get that at home. The question becomes, and sometimes we don't, it's a silly thing to care if something's on either side of the zero line. Mm-hmm. But in this case, when it's jobs and it's negative, the narrative of the slowdown may be the same, but does it matter more now that we seem to be losing jobs?
Of course it matters.
Right.
It matters. And so this is a month. We have to look at the trend. So we've seen the weakness for 2 months in a row. We're going to be looking forward to see if that trend holds through the end of the year. But we have to caveat it with other data, not just these numbers. So what have we seen in other data? First of all, we've seen very low initial jobless claims, which means that this is still a low hire, or no hire in this case, but also a low fire jobs market. That's very important. The second important other data point that we have to weave in here is Q2 growth rates for the economy as a whole. So that GDP number was strong. It was robust in the second quarter. The question is, will that growth that was based on consumer spending... And it is continuing,
by the way. We have the tracking numbers for third quarter are surprisingly... I was very, by the way, moved by the Contessa Brewer's report about Carnival bookings up 26, booking healthily into 27. Casinos are doing well. It's hard to see the consumer flat on their back when they're basically taking cruises and gambling at the casinos.
So consumer spending is the backbone of the economy, and more so now than ever. It's really driving that growth. But the question in my mind as a labor economist is that consumer spending strong enough and broad-based enough, and that's an important caveat as well, to support job growth? We know it's supporting economic growth, but is it supporting labor market growth? Right now, we're not seeing it.
Can I just interrupt here real quickly, guys? If you could put up the 10-year...
Yeah, exactly.
Go for it.
No one was saying anything.
Okay.
You hit stop. And...
All right. Well, then I'm going to go ahead then.
Okay, go ahead.
Right? Okay. Take a look at the 10-year. It did seem to take a little bit of a leg down here.
Yeah, we were at 416.
410 we had. We were at 414.
That's significant. That's 6 basis points.
4 or 5, 6 basis points.
Watching.
And I can't do this on the fly, but I'm guessing that the outlook for the Fed funds futures has also declined. We know the Fed, you may not have wanted this to happen, we know the Fed gets this data. You guys remember? You guys don't remember this. It was a bit of a kerfuffle. In a footnote to one of his speeches, Fed Governor Waller revealed that the Fed is getting this ADP data even more granular than we get it.
Really?
And I.
What do they know that we don't know?
Well, they get a little bit more granular, and ADP didn't. I think
explain what it was.
Nobody really. No, they did. No, they didn't really want this to be necessarily public. So it is out there now that the Fed does watch this data. So if the question is the Fed flying blind in this shutdown? It's not. It's going to be looking at this ADP data.
Let me just add an amendment to that, and that is, I thought that was the case. The Fed was going to be watching this data much more closely. Is there any effect to your data gathering if the government shut down? Any of those inputs, does that hurt what you're doing?
No. If the BLS does not put out their report on Friday, it doesn't change our next report because we are not reliant on survey data. Okay. This is an independent measure.
That's why I was confused by the revisions with the government and taking that into account, because I thought you guys just completely ignored it.
And that is true. The BLS relies on their estimate of the QCEW, of the truth benchmark. They rely on survey data from the CES survey. And so these are independent measures. The raw data that goes into these reports are very different, and they're independent.
What does the Fed know that we don't in terms of granularity?
You know, if I could sit in that room, I could have a complete answer.
No, it just means in terms of the ADP granularity.
You know, the Fed has been vocal in minutes, in official documents. They've actually published research using ADP data, so it wasn't a secret. Okay. And what we try to do at ADP is provide this data to the public so you can see what we see, which is a private sector hiring momentum that is slowed. So we're trying to capture in a bottle, in an index, what we're seeing on the ground with our clients.
That's a totally different question. Let's say the BLS didn't exist, and you wanted to create or recreate what the BLS actually does or has through third parties and whatnot. You are a third party to some degree. That's what it is. Could enough people put together any kind of something through third party data that would actually get you to something that either approximates the BLS to the extent you believe the BLS is the truth serum?
Not with the ingredients we have now. First of all, ADP is missing 15 to 20% maybe of employment when it comes to the government sector, the federal sector. So that's really, really important to have because those federal workers are also the segue into contract workers, which come from the private sector. So there is a bridge there that is not going to be captured just by private sector data alone. So this report is meant to be independent, yes, but it's also meant to be a complement to government statistics. It's not meant to replace it.
There's no replacing the total counting of the population and the total number of people working. And this gets a little more granular than probably we want, but one of the things that ADP does is they have a natural growth rate of employment among their clients, which is higher than the average because they're a self-selecting. So they have to readjust down their growth rate to more correctly reflect what's happening in the economy.
Nela, one more question. You all focus on private payrolls.
That's
Government obviously is a big question mark this time around. You're so close to the government jobs report. I assume that that's because government more often than not is fairly stable. What happens if there's a big change in the government numbers? How would you capture that? How would you reflect it, or could you?
If there's a big change in federal jobs?
Yeah,
or?
just what they're threatening with now would be additional layoffs, not furloughs.
Yeah, I would be looking at how that affects private sector employment. So a lot of people who work in the federal government are contractors.
Yeah.
So think about cafeteria workers or janitorial workers. If they don't work, they don't get paid. There's no sense of furlough or back pay. Right. So that is going to show up in the private sector numbers. That is going to be an indication of what's going on, even though we can't see with perfection what's going on in federal hiring and layoffs. We can see the knock-on effects in terms of the private sector.
Is there any way that we're missing a reacceleration of the labor market right now, in your view?
Well, let's look to see where there were bright spots. We saw large companies are hiring. Even in this downbeat jobs report, they were positive. They were positive in information technology and in healthcare.
So if you had to guess, reaccelerating or not hit bottom yet?
I think I would need another couple of months to make that call. I really would.
We have to wrap up, Joe, but I've been concerned about the extent to which these tariffs hurt smaller businesses versus larger businesses.
And that could explain
If you're a big company, you can either get in line for an exemption of tariffs from the Trump administration, or you can hire somebody to go resource your overseas product in a lower tariff place. If you're mom and pop, I don't know if mom or pop is making the call to Indonesia to see if you can get a better fabric or circuit board there versus Japan or China or wherever. I think that's so. I wouldn't be surprised to see that. I'm afraid. I hope that the Trump administration will take into account this idea of the burden of tariffs on small companies versus large companies.
And you know you can gamble on cruises.
And they have some cruises without...
You don't have to just go to a cruise or go to a casino. You
can do both.
Yeah.
Are you a cruise person, Joe?
I was at one point. Now I don't.
My wife and I decided we're not cruise people.
I'm not.
We took one cruise and we decided we're not.
You know, you're on that boat with 2,000 people no matter what. That's why some people disappear. They just can't take it. They just...
Steve, thank you very much. Nela, thank you.
I love where we ended up.
We get you like being on this boat? This is a hell of a boat.
This is a love boat.
Love boat. You can't even get off the boat.
Exciting and new.
Oh, yeah,
Come aboard.
It's not
Can't even get off the boat.
We're expecting you.
It's not the Love Boat. This is a 3-hour tour.
Yes, a 3-hour tour. Exactly.
On the minnow.
Touche. Beautiful.
Coming up next on Squawk Pod, the rest of today's headlines that got us squawking. We'll be right back. You're listening to Squawk Pod. Here's Becky Quick.
Up and Becky, Q.
Welcome back, everybody. Berkshire Hathaway is reportedly speaking with Occidental Petroleum about buying the company's petrochemical business for about $10 billion. The Wall Street Journal says that a deal could come together within days. A deal to buy the Occidental unit would be Berkshire Hathaway's biggest since 2022, when it paid more than $11 billion to buy insurer Allegheny. Berkshire Hathaway is Occidental Petroleum's largest shareholder. There have been a lot of questions about what would happen with this. The chemicals business, not just for Occidental, but for other chemicals businesses as well, has been in a bit of a trough this year. If you're looking at their expectations for what that unit will earn, it was $850 million in pre-tax profit versus $1.1 billion in 2024 and $1.5 billion back in 2023. A lot of questions still swirling around it, but you can see Occidental shares are up by about 1.33%. Walmart announcing that it will eliminate synthetic dyes from all of its private label brand food products. Those brands include Market Side, Better Goods, and Great Value. The retailer has set a full implementation deadline of January 2027. It also pledged to eliminate 30 other ingredients, including certain preservatives, artificial sweeteners, and fat substitutes. Walmart says that 90% of its store brand food items are already free of artificial colors. The company said that the move reflects changing customer preferences, also what we've heard from the FDA and what they'd like to see. But it is something I think that parents look for in the stores when they go shopping. So probably a good move. Glad to see it.
Are we absolutely sure that, like, Twizzlers You know the good Twizzlers?
Use red dye?
No, we absolutely do know that. Will it psychologically taste the same if it was like just clear or just some off?
It will if you're not training kids to think that the color.
No,
is
I know,
the
but I just wonder. I think
you're going to be
I
forever
don't think it would
tainted.
taste as good.
You're going to
Yeah.
be forever tainted, but this is about saving the new generations.
I know.
You're a lost cause.
I know. Warren's 95 and worth $80 billion with all those dyes.
Yeah.
Federal Trade Commission filing suit against real estate giants Zillow and Redfin, saying the two companies illegally conspired to reduce competition in the online rental listing market. The FTC alleges the companies broke federal antitrust laws earlier this year when Zillow paid Redfin $100 million to essentially rehost Zillow multifamily rental listings on Redfin and its websites. In a statement, a Zillow spokesperson said its listing syndication with Redfin is both pro-competitive and pro-consumer. Redfin did not immediately respond to CNBC's request for comment.
And we're showing the stock of Rocket companies because Rocket owns Redfin. But I think this is an amazing story where the disruptors, remember it was the real estate agents and the realtors who were so mad about the sharing of the multiple listing service.
Yep.
They were the disruptors who came in and disrupted that industry. And then all of a sudden, once you're the big incumbent,
Right.
You don't feel like,
Then you become the incumbent.
yeah. You become the incumbent, and somebody's going to bust in and say you're the one who is holding back.
I just love all those. I love all those companies because it's always a great time to buy, isn't it? It's always or sell. It's a great time to do either. It just is.
More transactions?
More transactions.
Yeah.
They're great. Yeah. Oh, I can't get it for
That's
you
what
know,
the broker.
you can't-
That's what the broker would tell you.
Right.
too.
They would, and the broker
I mean,
they work
the
both
stock broker
sides.
would tell you.
Or the investment banker.
Oh, market slow. We can't. You definitely got to come down on your offer. But the other person, oh yeah, you definitely. You know, just I love the.
What's Warren Buffett's great line? Never ask your barber if you need a haircut.
Right.
Exactly.
And that is the pod for today. Thanks for listening. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern to get the smartest takes and analysis from our TV show right into your ears. Follow Squawk Pod wherever you get your podcasts. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.